Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Well guys, so let's take a look what is going on currently on the euro currency. It's very difficult to say what will happen today because today is the New Year's Eve. Well, and hardly market will show any solid price action. Well, probably it will be thin and people already started to celebrate. Well, anyway, currently we see the price action that we have discussed in our weekly research, particularly speaking, we see some bounce up as a retracement after first the strong acceleration right back up above these highs, some wash and rinse of the previous highs, and then fast return right back down. And as we have discussed in our weekly research, we said that currently the returning of the price right below the broken highs looks more significant than the first penetration, because particularly the returning of the price below the previous highs tells about some sort of the inability of the market to hold above the broken highs, and it's finalize the and complete the wash and rinse of this further breakout above these highs. That's why, as we said, particularly the downward action is more significant right now than the previous upward action, and that's why we said that since we have some other patterns that increase the probability of the short-term bearish development, as we have discussed in the weekly research again. So we said that probably we should be ready for some bounce up, retracement after this move down, okay? And as this looks more bearish currently in the short term, this market probably could show some downward continuation, some downward extension. And I think that at minimum market should challenge these lows and reach the confidence support area on the daily time frame that stands around 136.14, 136.34 area, this area. Also we have this bearish divergence, right, the significant monthly resistance, completion of this ABCD extended ultimate target 1618. Here we also have the butterfly sale on the lower time frame charts and other patterns that have been formed here. That is, by the way, the stop grabber. And in general, we could start to speak about the bullish sentiment and bullish continuation only if market will take out of these highs, and simultaneously market will move above the significant monthly resistance and will erase this bearish engulfing. That's bearish stop grabber. As you can see that this high is really significant. That also, guys, if market will move above it, it will simultaneously return right above these broken highs and will confirm its bullish ambitions that market really could continue move high. Until that will happen, it's very difficult to count on the really bullish continuation and take the long position right now. Conversely, in the short-term perspective, it looks more like the bearish development. It's more possible. So let's take a look on the 4-hour time frame chart. On the 4-hour time frame chart, we see our butterfly retracement after the hitting the 127 extension target of this butterfly, 618 retracement right to the 137.27 area, and this is retracement after this plunge down. In fact, well, if we'll take a look where this bounce up has stopped, you can see that market only has reached the upper border of this consolidation that we have discussed previously. Recall that previously we said that this market has returned right back inside of this consolidation. It means that market will continue move high and probably will double this range of this consolidation to the upside, as it should happen due to the classical approach to the trading of the consolidations. So we know from our Forex military school that if market breaks through some rectangle, it usually should pass the equal distance in the direction of the breakout. That has happened. So you can see upward breakout and market has moved above almost equal the distance. This market has stopped here due to the existence of the weekly pivot resistance one on the previous week and daily overbought. So currently we see this bounce again to this area and market's failure to pass through it. Now we stand at the significant area in the short-term perspective. Why? Because take a look here, we have the bullish stop grabber pattern that theoretically suggests the taking out of these highs. Okay, and market now is approaching to the MACD predictor again. So if another bullish stop grabber will be formed, we should not take the short position until market will not erase this pattern. So if it will happen, if a market will form the bullish stop grabber here, we can't take position against it. So we need to wait when the market will erase this pattern. We know that the failure point of the stop grabber is its low. When the market will move below its low, then we probably could take the short position, because currently I guys more count on some sort of the A, B, C, top, D development rather than upward continuation here, based on the recent action and the reversal patterns that we now have on the different time frame charts. Well, but first we need to watch what will happen here. The market will start to flirt with MACD predictor. If it will form the bullish stop grabber again, do not take the short position until market will not erase it, because that could lead, for instance, to another butterfly. So take a look, this could be the left wing. If market will form here the bullish stop grabber, it could start the right wing of the butterfly and will move above it, above the highs. That's why we need first to see the erasing of this pattern, if it will happen, of course. If not, if market will not form the stop grabber here, then we could take a look at the hourly chart. On the hourly chart, we have a move down that we said looks like significant. 50% retracement that the euro currency likes most of all, 138.10 area. Okay, and now it's consolidation here. Trend has shifted bearish on the daily on the hourly time frame chart. So if market really will continue to move down, we could get this A, B, C top pattern, and take a look that the 618 minor extension stands below these lows. Okay, it means that by this action, these lows hardly will hold, and market will not form the butterfly to the upside. Because if market really will continue to move lower, it should reach at minimum the minor extension, that is 618. And as this extension stands below these lows, market should reach it, it will simultaneously erase the possibility for appearing of the butterfly sell pattern and possible upward continuation. Next target stands at 100% extension, is 136.55 area approximately. It's right here. And take a look at the daily time frame chart. This stands very close to these lows. This market probably will challenge it. That is our very short-term perspective. What we should watch for here, and what really could happen here. In the longer term perspective, as we said, market should take out of these lows to tell us that it stands on the way to the downside, and so that we could treat current move as the reversal. Until market is flirting around the 136, 137 area, somewhere in this area, very close to the previous highs, we can't say that this is reversal. At least until market will not form here some reversal pattern. If we will get some sort of the, I don't know, head and shoulders or something extended, some other extended reversal pattern, maybe butterfly or something of that sort. In this case, we could say that we could start to think about taking the short position. But right now, when the market just calling around this previous top, chances exist on the further possible upward continuation. That's why currently we should focus only on the very short-term perspective and trade the very short-term patterns. One of them we have on the hourly time frame chart. For me, currently, I suppose that still the chances to the downward is a bit greater, because that is still, guys, wash and rinse. So that is short-term reversal. That is also overbought on the daily time frame chart and stop grabber. So also there's strong monthly resistance. And at least minor extension to the downside, minor continuation of this wash and rinse should follow. Besides, if we will use some other time frame, unfortunately, MetaTrader doesn't allow us to use, for instance, 8-hour charts or something of that sort. I think that you could find the time frame that will show you clear railroad track, some sort of the huge bullish engulfing pattern here. It stands somewhere between the 4-hour and daily chart, maybe 16 hours chart, maybe 80-hour chart. Well, somewhere there, probably we could find such sort of the time frame on the other software. For instance, CQG that I previously had has allowed me to use any time frame that I would like to. So just could divide the bars at the time frames that I need to see, I need to watch. Here something of that sort. Probably if we could use any time frame chart, we could choose the one that could show us here's the huge bearish engulfing pattern, and that is normal retracement after appearing in the engulfing. Huge railroad track, normal retracement 50%, and some continuation should follow after that. So let's see what will happen. But again, guys, on the 4-hour time frame chart, be careful with this current action. If market will form the stop grabber, do not take the short position until it will erase this pattern, because this could be really this is the risky moment for downward continuation. This is the risk of the factor risk for possible downward development. So be careful.